the housing market going to crash? Now that's a question I've been getting a lot lately for some reason. I've been asking myself, what's prompting consumers and industry folks to ask me this question? Just where is this fear coming from and what's motivating this question? I honestly don't really know, but I'm guessing that most of us are a little gun shy after living through the Great Recession. And maybe some of this positive momentum and lack of inventory has us feeling a bit of deja vu. I mean, here in Seattle and the surrounding areas, it's crazy. The inventory is ridiculously low and the bidding wars are unheard of. I mean, I had lunch with a friend in Seattle the other day, Ballard to be exact, and she listed her house in the high sevens. I think it was like $780,000 to be exact. The house sold immediately for just over $1 million. It was bid up over $200,000. Now, obviously, this isn't happening nationwide, and this isn't the norm even for the Seattle area, but you can see why some folks in Seattle are going, wait a minute, this feels eerily familiar. So the question is the housing market going to crash? Now we did some digging and leveraged someone way smarter than I and found some interesting stuff. Jordan Wirsz is the CEO of Savant Investment Partners and has managed nearly $1 billion in real estate transactions. He wrote an article for the Inman Select readers and came at this from a completely different angle. Jordan began studying and learning markets locally and nationally and globally and discovered what he believes is the dominant force that drives real estate values and helps him predict what the future holds. Since the downturn in real estate, he's made millions and millions of dollars, all starting with this one quote that he stumbled across during his research in 2009. Bull markets are born on pessimism and grown on skepticism and mature on optimism and die on euphoria. The time of maximum pessimism is the best time to buy, and the time of maximum optimism is the best time to sell. Or in other words, one of my favorite sayings from Baron Rothchild, buy when there's blood in the streets. Jordan doesn't focus on what traditional media would focus on, interest rates and commodity prices, wages, not even employment numbers. Why not? Well, he believes that these are purely lagging indicators of what's happened and not what's going to happen. Okay, I'm listening, Jordan, go on. Jordan states the so-called experts on national television rarely think outside their data-driven boxes and often get overloaded with data points that are more complex than trying to decipher encrypted computer programs. And all that can be avoided by focusing on one simple data point. Cycles. Real estate cycles are among the most predictable of any market he has studied, and believe it or not, one simple chart can be used to determine approximate times to be in and out of the market. Take a look at this. This chart is a simple quick view of real estate activity, not prices. The real estate activity cycle is extremely predictable, and as you know, peaks in activity are typically associated with higher prices, and troughs in activity are associated with low prices. As you can see, the cycle is not perfect, but it is as close to a market timing look as you can get. Jordan believes the next peak in activity is scheduled to be in early 2020, approximately 2022 to be exact. Interesting graph and approach, but I wish I knew the data that was input into making that graph. I mean, Jordan kind of glances over this in the article. I need a little bit more facts before I totally buy in. Now sure, we've had a pretty good run since 2008 and 2009, and maybe it's time for the market to cool off or taper off, but I don't know that that means that a crash is coming. I mean, I'm no CEO and I don't have billions of dollars worth of real estate dealings or management behind me. On second thought, maybe I do, but that's not important. Anyways, what I'm trying to say is I'm no Einstein, but we have something going for us today that we didn't have going during the Great Recession that will play a major factor into answering the crash question. Today, all these real estate transactions have great, well-qualified buyers behind them. No stated income loans and very few 100% loans, not to mention quite a bit of equity and skin in the game. We didn't have that last time. Folks didn't have to go through the gauntlet that we put people through today to get a home loan, and we didn't have to adhere to things like debt to income ratios and verify things like assets or employment back then. Anybody that can get through today's loan gauntlet deserves to be in that house and can certainly afford it. So for that reason, I believe a crash is not imminent. A slowdown or a taper off? Sure, yeah, of course, prices can't withstand this pace, but a crash? I mean, I don't think so. Maybe I'm wrong. I don't know. I mean, unless a bunch of people start losing their jobs or our currency goes to shiz, but I don't see that happening either. What do you guys think? I could go on for hours on this topic, but I'm sure I've already lost most of you. So why don't you guys share your professional insight on the matter down below, and make sure you share and post today's show on your social streams, and we'll see you guys next week.